What is going on, my friends, and welcome back to another video on the channel. Well, I wanted to quickly update you guys on the inflation numbers that we just got about 6 to 7 minutes ago, exactly what this means for the country in my opinion, and how I am expecting these markets to react going into the next couple days and the next couple weeks here. So we just got information, of course, from the Bureau of Labor Statistics that the Consumer Price Index increased 8.6% in May, which marks the highest reading since the December of 1981. Over 40 years, we have not seen these levels. Now, most analysts and most economists were expecting to only see the CPI, or the Consumer Price Index, raise about 8.3%. So the fact that we did rise about 8.6% means that we did rise even more than most economists and analysts were expecting, which is, of course, never a good thing when we're trying to see inflation numbers even balance out and start to continue back towards the downside. Now, of course, as a result of this, we have seen this market not really doing much, as we do start to see this market kind of just flatten out right now. So I do want to talk about exactly why this inflation is going up, some good signs that we are getting from core inflation or just core CPI data in general, and what I am expecting from this market over the next few days. So one thing we can see here is that if we pull up a chart of exactly how this is going to be categorized, we can see that energy was the leading cause of this extreme growth in the CPI, right? Consumer Price Index. We can see all items were at generally an 8.6%. Food was up a good bit, about 10.1%, but energy itself was up 34.6%, which absolutely drove the entire CPI to extremely high levels, of course, levels we've never seen in the last 40 years. Now, the good thing is, though, there is a shining light in this, is that the core CPI is continuously working its way down. What we know is that you have your CPI and your core CPI. Your core CPI is going to be your CPI, or your Consumer Price Index, without food and without energy. And I don't know if you've been to McDonald's recently, or Wendy's, or Popeyes, and I don't know if you've gotten gas recently, but we do know that food and energy have been the leading things that have been hurting the pockets of your average citizen. So, of course, whenever you subtract those two, it is good to see that the general CPI, the core CPI, without those two items, is still continuing towards the downside. As in my opinion, that could be a shining light to say, once we start to see certain situations, within the world work themselves out, once we start to see the overall supply issues work itself out, and once we can start to see the world figuring out these true, just general fundamental problems, I am under the belief that we will then start to see inflation getting controlled, and not only controlled, but start to see a steady decline at some point, in my opinion, relatively soon. So considering the fact that we are seeing core CPI data itself showing this pullback, it could be a little bit of a foreshadowing that seeing this, this inflation overall get under control may not be as hard as we once expected it to. Now, going forward, what we know is that the Fed does have a meeting on June 14th to June 15th. Now, this is where it's going to get interesting, because I honestly am not sure exactly the way in which they are going to go about this now that we did see inflation numbers come back higher than expected. What we can say is that if it is higher than they expected, they may start to either plan on going even more hawkish. They can start to plan on going even further with this thing, saying that, okay, it missed the expectations. It is higher than we expected. We're not seeing this peak just yet like we were hoping for. And so we're going to have to go even more hawkish. We're going to have to make this thing get even tighter. We're going to have to do even more quantitative tightening. And we may have to really start to hammer down on this economy until we can get these numbers under control, especially food and especially energy. And if that is the case, then of course we are going to see the entire crypto market react quite bearishly from that, in my opinion. I think the result of them saying something of that nature would start to bring this market back down to probably these lower 25,000 levels. So for that reason, it is going to be extremely, extremely, extremely important to wait for June 14th and wait for June 15th before doing anything too substantial, in my opinion. I think realistically, this market's probably going to stay relatively flat up until that time. We may start to see a lot of volatility leading right up into it, but once that does happen, and once we do get that report, really pay attention to the dialogue from the Fed, because it is going to be extremely it's going to let us know, it's going to be super implicative of what we can expect going forward. Personally speaking, I don't think that this was such big of a miss that they are going to go much worse than they are now, right? I don't think they're going to go up to 1 percentage point. I don't think they're going to do anything like that personally, especially considering the fact that we are seeing the core CPI itself pulling back a lot, and it is starting to show signs that it may have reached a peak. right? So considering that, I do believe that they may come to the realization that the majority of this is due to energy. It is due to this massive growth we're seeing from energy. And this may not be something that they need to do a lot more quantitative tightening over, or a lot more pulling back on investors' portfolios and things of that nature, due to the fact, again, that this is more solely an energy problem than just an overall economy problem for the last month, at least in my opinion, right? So with that said, I'm not necessarily expecting them to do anything too crazy. I think they're probably just going to follow plan and follow through with plan as they originally did say. But of course, I don't know. You can never know until you see it happen. So realistically, my goal and game plan right now is to just not do anything. I think that right now, trying to go ahead and trying to make some big purchases at these levels could be extremely, extremely dangerous, due to the fact that if they do decide to, become even more hawkish based off of this result, that could of course lead us to start to see this continuation to the downside, as we have been again in this consistent downtrend for the last 8 to 9 months at this point. Okay, so with that said, guys, the biggest thing, just be careful in this market right now. When you have a market reacting so specifically off of news, I don't know if you guys remember the virus. Whenever the virus, I'm not going to say its name, but the virus came around, every single time that we would get information about the virus numbers, these markets would just go up and down and up and down, and they would freak out. And buying in times like that leading up to that news is so dangerous, because you can never really predict what's going to happen or how it's going to affect the market. So the biggest thing is right now, continue to dollar cost average wouldn't be a bad idea in my opinion, but doing mass buys at this point is extremely dangerous until we can get an idea of what their game plan is going forward. So personally, again, I am going to just wait until June 14th, June 15th to get that information and make a decision from there. And of course, I will update you guys as that does happen. But with that said, that's going to be about it for today's video. Of course, I hope you guys did enjoy, and I will see you all next time. Peace.